How to Start Trading for Beginners, Step-by-Step Guide. Step 1. Educate yourself. Start by learning about the financial markets, trading instruments, stocks, forex, cryptocurrencies, commodities, etc., and trading strategies. Books, YouTube, and educational websites can be valuable resources. Understand key concepts like market trend, market cycle, type of trading, supply and demand, smart money concept, SL hunting, etc. Step 2. Set clear goals. Determine your financial objectives. Ask yourself questions like, what are you trying to achieve through trading? How much capital can you afford to invest? What's your risk tolerance? Knowing your goals will help you tailor your trading approach. Remember, trading is a risky business and most of people lost their money in trading. So before start trading you should give your focus and learn some things before taking trades. Step 3. Start with learning on YouTube. When it comes to diving into the world of stock market trading, YouTube is a valuable resource to begin your journey. It offers a wealth of information and tutorials that cover the basics of the stock market. Here's how to get started. YouTube Basics. Begin by exploring the vast array of stock market tutorials available on YouTube. You'll find a plethora of content ranging from beginner to advanced levels. These videos can provide you with a strong foundational understanding of trading. Avoid paid courses initially. It's advisable not to rush into buying any paid courses to learn trading right away, especially if you're new to the field. There's a wealth of free content on YouTube that can help you grasp the fundamentals without spending money. Consider paid courses later. Once you've gained some confidence and experience, you may want to invest in paid courses. However, make sure the course you choose is from a reputable source with a proven track record. Stay tuned. In the future, I'll also be sharing my insights and understanding of the market on this YouTube channel. Keep an eye out for upcoming videos where I'll provide valuable information to help you on your trading journey. Summarize in your own words. After watching a video, summarize what you've learned in simple language. Practice with a demo trading account. Sign up for a demo trading account with a reputable broker, usually free. Use the trading platform to simulate real market conditions without risking real money. Apply the trading concepts and strategies you've learned from the videos. Practice making trades, setting stop-loss orders, and managing your portfolio. Monitor your progress. Keep track of your trades, including wins and losses. Analyze your trading performance and learn from your mistakes. Adjust your strategies based on what works and what doesn't in the demo account. Continue learning and practicing. Repeat the process with more YouTube videos and different trading topics. Gradually expand your knowledge and trading skills. Step 5. Risk Management. In trading, risk management is all about making sure you don't lose too much money when you're buying and selling assets like stocks, currencies, or commodities. It's crucial in trading because it helps you. We will cover this topic in upcoming videos in details. Money management in trading means using a strategy to handle your trading funds wisely. It's essential because it helps protect your money, keeps you trading for the long term, and ensures you don't risk too much on a single trade. In essence, it's your safety net for successful trading. Management and money management are integral to successful trading. They help you control potential losses, protect your capital, and maintain a structured approach to trading. By following these principles, you can increase your chances of long-term success in the financial markets. Most important aspect of trading is the trading psychology. Trading psychology refers to the mental and emotional factors that influence a trader's decision-making process and behavior in the financial markets. It plays a crucial role in a trader's success or failure. Here's a simple explanation of trading psychology. Emotions in trading. Trading can be emotionally challenging. Fear and greed are two powerful emotions that often drive traders to make impulsive or irrational decisions. Fear can lead to selling too soon, while greed can result in holding on to winning trades for too long. Discipline. Successful traders maintain discipline by sticking to their trading plans and strategies, even when emotions urge them to deviate. This discipline helps prevent impulsive actions that can lead to losses. Patience. Patience is a virtue in trading. Waiting for the right setup or opportunity is crucial. Impatient traders may enter trades prematurely or exit too soon, missing out on potential profits. Confidence. Believing in your trading strategy and having confidence in your decisions is essential. Doubt and second-guessing can lead to inconsistent trading. These are the most important steps in trading as we start trading. We need to understand this one by one, which I am going to show you in upcoming videos, so stay tuned with this channel. Thanks for watching this video.